Hello everyone, welcome to the Ichimoku daily analysis for gold for Thursday, February the 25th, 2010. Well, quite a change of character for this market today, and we can see that we had three consecutive red body candles, and the previous day's candle, the body of that candle was quite a bit smaller than the previous day's candle. That raised some doubt about the viability of the trend in the first time frame, and we now have a fairly large green body candle. The green body candle tells us that the bulls have made some very strong net progress to the upside on the day between the open and the close. We do have a shadow on either end though, and a very small shadow on the top which represents downside price rejection, but a larger shadow on the bottom which represents the bulls coming in as the market tried to trade off down below the Kijun-sen. Now we know that the Kijun-sen will tend to act as an area of support, and this is the second occasion. Yesterday the Kijun-sen acted as an area of support for this market. So that will be an important area for this market if the trend continues to the downside. Now we do technically have a downtrend in place. We had a series of lower highs and lower lows. Today in bar chart terms we have an outside day, and that's where we have a day with a higher high but a lower low. So that raises some doubt about the viability of the trend itself. Now in Japanese candlestick terms, this is bearish engulfing pattern, and that's where the body of the current candle, a bullish body, completely engulfs the previous negative body, and there is a very strong potential for a reversal to the upside here. These patterns do require confirmation, however, and confirmation would be the high of the current candle being taken out with a higher high and a higher low. If that does happen, then there is potential for the market to trade up to around this 1120 region, roughly where the bottom of the cloud is, and there is potential for strong resistance around that area. We can see from the previous interaction with the cloud here on 4 or 5 occasions and within this region that there was strong downside price rejection each time the market attempted to trade up there. So if the market does appreciate and trade up above 1120 and towards the cloud, then we should expect to see more downside price rejection. If the downtrend does continue, then obviously this area here at around the 1089, 1088 level should be watched for potential support, certainly the low of the current candle, and then certainly at the 1080 region, and this zone between 1080 and 1066, which we identified as a zone of previous support. We should watch that for continued support. If the market does trade down below there, then we have potential for support all the way down to 1045, where the buyers came in fairly strongly as the market attempted to trade down below there. So we have a market, once again, which is bound by the strong resistance overhead, probably about $15 or so above where the market's trading, and then a market bound by very solid support below. So I think the prudent thing would be to wait until we see how the market interacts with these areas and look for bullishness or bearishness coming in for a potential trade if the market breaks out of either the resistance or the support.